Well, hello everyone. Welcome to Trading a Smaller Account. I do look lovely today, but you aren't seeing me because I rebooted my system because things were running a little slow, and then it decided to go even slower. So I don't know. I was throwing some shade earlier. We were talking about the Canadian-U.S. rivalry in hockey and curling and other sports at the Olympics. So, maybe my system decided to throw a bit of a hissy fit. In any event, we have a ton to cover today in our Trading a Smaller Account Day. I would say that today is brought to you by the numbers 4, 3, and 5 because we have 4 trades to review, 3 new stocks. Well, they aren't new stocks. In fact, I think we may have traded all of these stocks in the past, 3 stocks to look at, and 5 trades to play. So given that we're starting a wee bit late, we may not quite get all of that in, but we're going to give it our best shot. So I would like to invite you to join me in the land of X. I've got Brent Moores, who has been riding shotgun and, just trying to keep everything going here while we work through some technical issues. But please join us on X at Brent Moores CS and at Barb Armstrong CS. We would love to see you over there. Know that everything that we cover today will be done on the paper money software application on the thinkorswim desktop platform. And know that there are some nuances and differences. The biggest one for us in this class is that short option positions will never be assigned early in paper money. That can happen in a live account, and we'll talk about that as appropriate. Also know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges, and not all will qualify. So if you miss James and Kevin with their whirlwind discussion today on the markets, both now, nationally and globally, you really missed out. That is the only Trader Talks that isn't archived and recorded. So put that on your docket to look at, to make sure you participate in next week. And we're going to focus on both, reviewing and managing some existing trades, which is a critical component of success as a trader, and then placing a bunch of new example trades. Now, next Friday, I will be in San Diego, but I am bringing my stuff with me so that I can still teach my class Friday morning, so there won't be any interruption there. If you are coming to San Diego for the first market drive of the year, please come find me, and we can take a picture together. It would be great to see you. Be there, be square. And if you're not signed up, it is not too late to register. Now my thinkorswim doesn't want to come up, and today just keeps. Oh, there we go. Okay, I may never leave this again. Yeah, the ETF session today really was awesome, wasn't it? So here's our S&P 500, and it's come down to a support level. It's consolidating a bit, so if you're a line drawer like I am, you might say we're creating maybe a bit of a pennant pattern here, potentially. But this uptrend, one can't say that, it's been totally compromised or anything like that. So there we go. So that's what's happening with the S&P. Breaking news today was that the Supreme Court has knocked down the tariffs and said that they are illegal, and the market seems to be pretty happy with that decision, and things are rebounding, or moving up nicely on the NASDAQ, on the S&P, on the Dow. Let's have a look at the Dow. So the Dow is still holding its own, uptrend still intact, but this 30-day moving average has been acting as a support level and appears to be continuing to do so. We've got this doji pattern currently setting up. It's a live candle, so it can change by the end of the day, but not looking like major cause for alarm. And our small caps are still within this upward trending pennant and still within that range. If we look at the VIX, be interesting to see, so are we surprised that it's starting to fall now? Yeah, not really, but it's still at the high end of the range of where it has spent a lot of time over the last 9 months to a year. Okay. So let's, in the interest of time, I'm going to kind of go back and forth between new trades and old. So we did a trade on APA. In fact, we did 2 trades on APA. And we put in a swing target, and we place those trades. If we come here and look at the account statement, I think we just placed them last Friday. APA. So we placed them on the 13th, which was last Friday, the 13th. And that one worked out for us. We bought 5 calls at 92 cents and we got out at 108. And with these calls, if we're looking at these calls, I believe we had a swing target. So our target on these, if we bring this up, was 28.56. So here was our target. We placed the trade on Friday, which was this day here. And, we talked about that when we placed the trade and said, well, that's not that big a move. It's like, yeah, but, even if it's just like less than $1, this is a $28 stock. And we wanted to do something, we're small, nimble, and quick. We're not a big institutional buyer. So we said, like, what if we could get in and out before earnings and we just have this tiny target, but we might be able to make a little bit of money, and making a little bit beats a poke in the eye with a sharp stick. Now you might have said, well, man, if we had put our target higher, we could have made more. Yeah, true. Hindsight's 2020 and will continue to be so, right? But we agreed when we placed the trade, if we got here, we'd be happy. So how did that turn out? Well, if we come to our monitor tab and we look at APA, and we did both a stock trade where we bought 180 shares, and somehow that order went through twice, but we got in at 27.73 and we got out at 28.59. So how much did we make? Well, not a ton per share, granted. I'm just waiting for my drawing tools to come up. So, and this is for the stock trade. In at 27, out at 28.59. So we made a whopping 76 cents a share times 180 shares. And so we made $136.80. And there are no transaction fees on that because it was a stock trade. And so we call that a base hit, and we're happy campers with that. Now with the option trade, we bought a call. So here's our option trade. And by the way, back, just to complete the thing, our return on risk on the stock trade, and we just take our 76 cents and we divide it by the 27.73, it was 2.7%. You may say, well, that's not like anything to write home about, but hello, we were in this trade for 5 days. Not too shabby. Oh, did we make 86 cents? Okay, so let me double check my math. 28.59 minus 27. Oh, that's because I wrote my number down wrong. So we made 86 cents, sorry. 86 cents. I wrote the number down wrong on my sheet. So 86 times 180. 86 times 180. Oh. Yeah, so we made 154. And so then if we bring up our calculator, and I'm not going to do that because I'd have to erase this. So we made 154.80. So that'll probably change our percentage, just a minuscule amount. But if we made 86 cents and we divide that by 27.73, it's 3%. So when you have an inexpensive stock, like even a dime can make a difference. So that was 3% on that. And then on the option, we got in at 92 and out at 108. And so with the option, this long call, we made 16 cents was our net. And if we're looking at our return on risk, how much were we risking? Well, we could have lost that whole 92 cents. And so we made a 17% return. And so some might say, well, then options are clearly the better way to go. But following our risk management rules here, we bought 5 contracts, so we made 16 cents a contract, or $16 a contract times 5 contracts. Let's hope I got the math right. So we made $80 on this one. So we made, like about half as much. But still, we followed our rules and it worked out. So, we ended up with 2 successful trades. So our exit strategy for the option, because it was a swing trade, was to exit if it lost half its value. Good question, Vivian. And I haven't put in the trade management mini session folder. I haven't put one in for a swing trade, but I'll create one before I go to San Diego. So watch for that to show up. But you see here, our exit for this was either if it went up and hit the target, which is if I click the sprocket, it'll have the same price that this one did, or if it lost half its value. Well, it was at 44. We ended up, I probably had to pay more to get in than I was expecting. Okay. So yeah, the target, if we come and look at this, so here's our target. It was the same target because the idea was to place a stock trade and an option trade and then compare them. So the target was the same. Okay. Yeah, and you can go back and watch last Friday's class. It is available in the archives. Okay, so that's 2 of the 5 trades that hit our targets. So that's those 2. Okay, so let's go now and look at a new trade. I did say that we might look at AU today. And so let's look at AU. So this is a stock we have traded multiple times already. And look at the 9-month chart. If we want to do a 1 year on this and just see how much it's gone up, it's up 23% year to date. And so you might say, well, it's moved too far too fast. Why would we consider trading that? Well, for the science types among us, of which I am not one, 252% in the last year. Don't we wish we'd done a buy and hold on that, a year ago? But we didn't. So we are where we are, right? But if we look at this and we say, okay, this was setting up a bit of a consolidation pattern, breaking out today. It's at 112.60. So could we do the stock? And we're on the other side of earnings, and you can come and see that there are some analysts that have raised price targets on this, or many analysts. Could we do a fib target on this? So I'm going to bring this back. And if we did a fib target, how might that look? So let's come here. Now, if you're new to all of this, this fib target, and we need some more room at the top of our chart. So I'm going to come to my price axis and say, let's give me 20% at the top. So our fib target with the 161 extension would be around 130. Now, if you're new to fibs, I teach you getting started with technical analysis, and Fibonacci's are one of those strategies that I put in as a bonus session. So you can scroll through, if you go to Trader Talks from Schwab Coaching and go to the playlist, the getting started with technical analysis is listed close to the bottom. So how about we put our target at 130? Okay. And if we're buying stock, then, if it takes a while to get there, we can be patient, because this is not like a swing trade where we're aiming for it to get there, you know, within the next few days. Yeah. And somebody's saying, like, do we see a morning star here? And so again, if you're new to technical analysis, I did a bunch of short videos, and I'll show you where to access those. And somebody, he asked about the trade management mini folder. I'll show you that in a minute too. But technically, we want this to be like a doji and for it to have gap down and then come up. But it's Morningstar-esque, Lewis. Like, you're absolutely, like, this is a bullish configuration bouncing off in a big way today. You know, it's up 4%. So if we looked at this and we said, okay, well, like, how many shares could we buy? Well, our max position size in this class is $5,000. So we're going to divide that by our 112.58. And so we could buy 44 shares. We're going to put our target up here. I'm going to change my drawing tool. Come on, come to mama. Okay, doesn't want to show. Okay, there we go. So when you draw your line, you can just kind of draw it anywhere and then come in and edit and say, okay, I'm going to make this 130 and this is going to be my target. And it's a fib target. And show that on the right. Okay, so there's our target. And this is for our stop. Now, where might we put an exit? Well, we might say it looks like this is holding here. And if we come back, if we back the truck up just a little bit, looks like this 30-day moving average has been acting as a support. You know, but we could take yesterday's candle and say 104.31, go 3% below that. 104.31 times 0.97. So that would be, you know, 101.80. And I'm just doing this on my calculator just because it's a little bit faster for me. So 101.80. So that's still below that 30-day moving average. So we're going to come to our trade tab. And then if it's 101.80, we're risking about $10 a share. And we don't want to risk more than 500 on any one trade. So if we do 44 shares, we're under that $500. So to put that in, we're going to come and say, okay, we want to buy custom with an OCO bracket. We're in at 113. Maybe we knock it just a little bit shy, make it 129.50. And our exit is going to be 101.80. 180. And we're going to change our quantity to 44. We're going to click that and then touch anywhere here. Click anywhere here, make these good till canceled. Confirm and send. Now, if you're new and I'm moving quickly, one, I tend to move quickly in this class, but two, know that these are archived. And so you have the ability to go back and watch this. And if you say, oh, it was around the 27-minute mark, then you can very quickly get to, if you want to review how a trade was placed, an example trade. And this is a fib target. Okay. Fire in the hole. Now, does a stop or a target guarantee we're going to get out at exactly those prices? It does not. If it gaps down or gaps up, it could either be to our benefit or detriment. Yeah. So somebody's saying, how do we decide what to do? And you know what? It just depends on what your timeline is. Like, we could do a 1 ATR target. And in fact, the plan is to do a 1 ATR target. So we could compare that and say, well, how about we do a 1 ATR target with a long call? You know, so we could come out here to the trade tab. The 1 ATR on this is 588. Okay. So if we come to our trade tab, and how do I get that? If you're new, like down here, this is the ATR. And if we hover over this candle, it'll tell us like the average this stock has moved in the last 14 days is $5.88. a day from the high of the day to the low of the day. Okay, so we could come here and then let me go to notes. Okay, let me come down to the bottom. Okay, so this is AU1, the one ATR is 588. And so our target, then if we look at today's high, it's 114.67. 114.67 plus 588. Okay, math crew, you want to double check my math? Okay. 14.67 plus 588. 120.55. And then our exit would be today's low. So today's low, 106.74 minus 588. Now I do have a 1 ATR example trading plan. 106.74 minus. So this is designed to be a very short-term trade. So on Monday when we look at Monday after the close, if it hasn't gone up and hit the target, then we would look at the exit and move it up and move it up to $1 below the low of that day. So it's intended to be a very short-term trade. So how would we put that trade on? Well, we come out here and we might want to come out to April and we can see this is an 80-cent bid-ask spread. So we're going to try and get filled for maybe 570, like somewhere in between, closer to the mid. But we're going to click on buy and we're buying a single. And this is just a different way to put the trade in. So let's see if we can get in. You know, and sometimes, you know, this is paper money. We might get a paper money fill, but you can do this in your live account. And I do, you know, mess with the price or try and get a more advantageous price. And, you know, it can work. I'm not saying it always works. So I always put in the target first. That's just my pattern of doing things. It's kind of like if you do long division, if you're trying to do it quickly, you do it in the same order every time. And I'm not saying you should try and do these quickly. 186. So what we're trying to do is, you know, we're buying at that strike, and we picked that strike because it was the strike we could afford. Like, we don't want to risk. So let's see if we can get closer to the mid at that 570. We don't want to risk more than $500. And with this, we could lose all of it. So we're risking 570. We're a bit above, you know, our target. So we're going to come to long calls. And this is a 1 ATR target. Okay, so our target is at 113. Our target is 120.55. Or if it goes below $100.86. Okay, 120.55. 186, and then we can compare this to the stock eventually. And really, like, one of them we're expecting to be in a longer period of time, right? Right. Okay, so why that strike price? Because that's what we could afford, and that had quantity. Like, now we might have done this 130 strike. That might have been a better choice, actually. And we wanted to go out further so that time decay is less of an issue. Because when we see here, time decay at that 125 strike, it's 3 cents more a day. And it's 3 cents on a much smaller number. which means it's more painful. 3 cents is like 10, well, 3 cents, it's like 1%. Okay, so let's go and look at another trade that we did. Let me just grab my page of trades to review. So we did a trade on NEM. In fact, we did 2 trades on NEM. And so let's come and look at NEM. And so we got in here, and on NEM, we got out on the second trade on the 18th, which was Wednesday. So we got out here. And we had done 2 trades. And one of them, it may have been a bit of a paper money fill, but we got out of this trade. And regardless, we would have closed it out prior to earnings, which was Friday, which was the 19th. So we got out of it the day before. And when we come and we look at this, NEM, we'd already talked about the first trade. So we did one with a $1 wide strike, and we were in that for only 2 days. The other one we did with a $5 wide strike, where we got in, we paid $2.70, and we could have lost that whole amount. Now we only did 5 of these and 1 of these, because in total then we were risking about $500. Otherwise we would have done 2. Okay. 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 Oops. Wow, that's a dog's breakfast, isn't it? Okay, so we're going to come in here and just say, this is for our long call vertical, where the goal was for it to go above that 120 and stay there. We got in for 270, out for 405. So on that one, we made $135. And how much could we have lost? Well, we could have lost 270. We could have lost that whole amount that we paid to get in. And our target was 50%. And, we made exactly 50%. That was our return on risk on that one. Plus, we added $135 less the transaction fees to our coffers. So that was another success. And the one that was a $1 wide strike was also successful. It was just successful a little bit quicker. Okay. A paper money fill is sometimes you might get a fill in paper money that you might not get in your live account. Okay. So what I want to show you, because I don't want to forget, is if you come to Trader Talks, and this is where I add my little commercial, you'll want to make sure you subscribe to this channel if you haven't done that already. Okay. And I know, Vivian, you're asking me to show trades. I'll show the trades that we have placed at the end of the class. I always do. So if you come down to playlists, I, try and cover a lot. I'm always trying to, stuff 10 pounds worth of content into a 5-pound bag, so to speak. And so what I did is I created a folder where I could give you guys additional content outside of the webcast. And I just record them and post them. So you can see this one I just posted last week, Candlestick Patterns, What is a Doji? So if you're new to the world of technical analysis, and somebody had said, is this a morning star pattern? So here's a 3-minute video on what a morning star pattern is and how it's constructed and how it might be interpreted. Also, I've created a bunch of example trading plans, and they're just example trading plans. for you or against you. Did I disappear for a minute there? Okay. So if you lost me for a second there, this is on the Trader Talks platform on YouTube. Trader Talks from Schwab Coaching. And so, here's a long call with a 1 ATR target. We've talked about long call verticals. In fact, our next example trade is going to be a long call vertical. Here's an example trading plan for that. Buy right covered calls, another class favorite, on stocks that are $50 or less. So, there's lots in here. And then at the bottom are a bunch of, I just posted this one, how to customize a thinkorswim chart. They'll leave them up for a couple of years, and I think it had 7,000 or 8,000 views. But I just re-recorded it. I'm going to do another one on how to customize your monitor tab today. Okay. So if you want some things on thinkorswim, here's some short videos. So this is just a folder that I've created. And then there's also a playlist in here for Trader Talk, trading a smaller account. So you can go and click on that. And if you missed last Friday's, you can watch it. You may want to watch the one at the beginning of the year, because our goal for this year with this class was to make $200 a week. And, we started with 25,000. We're up over $5,000. So, so far now, like this week, we've been kind of treading water. I don't know why that's, in fact, we've lost a little bit this week. So on the 16th, we were at 30,692 versus 30,144. But this is a paper money account. So I don't know if transaction fees come out here. I know dividends, if we had a dividend paying stock and it paid a dividend, we aren't paid the dividend. And, dividends, in a live account, they could be discontinued and, et cetera, et cetera. Anyway, let's go and look at another trade. So we did NEM. So let's come and look at SanDisk. So SanDisk, is like, you think that AU is up. Like, this is up like a ridiculous amount, like 2,000%. They were talking about it on the network this morning. Year to date, it's up 154%. So you might say, like, isn't the horse already out of the barn? Well, does it look like it's stopped going up to you? It looks like it's still got a little juice in it, but it's a $637 stock. Like, holy smokes. Like, that's pretty expensive. But could we do a long call vertical? Well, I guess it depends. Like if we come out to SanDisk and we say, like, this is a $67 stock. So it's out of our snack bracket. There's no way that we can, with this one, there's no way that we can afford to do a long call. But we've got like a $6 bid-ask spread here, which seems kind of crazy wide, but this is a $68 option. So it's within that 10% window that we're looking at, and we've got hundreds of contracts. So could we come out here to March and say, could we just buy a vertical? Now, these are $10 wide spreads, but it's $485. We could lose all of it, but we can risk up to 500. And our goal, if you go and look at that example trading plan, is to make 50%. So if we say, okay, if we're paying $485 and I multiply that by 1.5, now we could make over 100% if it goes through both strikes and stays there, but we don't want to be greedy. Like, our big thing is make a little. Our big thing is like, let's make a little and get out. Yeah. So we are going to create an opposite order here, and we're going to say, if we can make 50%. So if you go to an Olympics viewing party this weekend and somebody says, like, you say to somebody, can you believe this crazy woman suggested that I get out of a trade with a meager 50% gain when I could have made 100? I could have made over 100. Well, now it's at 530. So see, I should have stopped talking to put the trade in. Okay, 795. You know, they would ask if you were committing a felony, you know, or, you know, ask, like they'd throw a chip at you, is my guess. So we're going to put that in here, and this is our goal. It's to make a 50% return. And, you know, this is like I said, a $10 stock, sorry, a $10 wide spread, but this thing is on the move, and our target on this is, let's come here, for it to go above 640. Oh, now it's 610. Dang it. This is like all over the map. So we'll just wait. There we go. We got a fill on that. So, but when we come and we look at the price of this stock, it's at $6.39. It just has to go up by 50 cents. And in an average day, this thing can move $50. So if we come back to our trade tab, you know, when we look at these numbers, it's saying we've got a 45% chance of this being in the money at expiration and a 99% chance of it at least kissing it along the way. And that's not taking our superlative technical analysis skills into account. But could we be wrong? We absolutely could be wrong. Yeah, and Trader Joe is saying like that spread is wide enough to drive a truck through or to park a bus in. And yes, it's not even $4 wide though. 71 to 75. Like that's not even $4. And this is a $70 stock, so it's less than 5%. And our goal is for it to be like in between, right? So, you know, could we also buy shares and put in a target of 725? Well, we could. And so we got 5,000 left, so we could do that. You know, so let's do that. So we're going to come up here. How many shares can we afford to buy? Well, we could buy about 6 shares. And the reason I'm saying 6 shares is because when we put our stop in, and our target is, we're going to do a swing trade on this. So the previous high was 725. We could actually buy 8 shares, you know, and be under the 5,000. But if we put a stop in at 557, which is, you know, below recent support, so 557.26, and you might say, why are you giving it so much room? Remember, the stock can move $50 in a day. So that's not even 2 days worth of movement. But if I take that 641.73 and I subtract 557.26, we're risking $84 a share. So if I buy 6 shares, I'm risking $500, $506. So when we come to confirm and send, you can see we're risking about not quite $4,000. So you're saying like, why aren't you buying another share or 2? That's why, because we're trying to honor that position sizing rule that says thou shalt not risk, you know, more than that. And we're going to compare to the long call vertical. But the goal is to be in this trade less time than we might be in the long call vertical, right? Right. Okay, so guys, I have to wrap. We were able to run a couple of minutes late, you know, or, you know, from when we normally wrap up. But we did 2 trades on SanDisk, and then we did both a long stock and a long call trade on AU. And so with AU, well, they now want more money for it. So we can just come in and say, okay, you want more. Oh, whoops. I don't want to give you more, that kind of more. And this is our 1 ATR. Actually, yeah, I'll put in this one. This is our 1 ATR. Okay, so we didn't get to Google. We were going to look at Google today, but we will be reconvening again on Monday. And so we did get 4 trades in. We did get all of our trades reviewed except for FCX. And FCX hit our exit on the long call trade. And so we are out of that one, and we took a small loss, a loss of $186. I will review that trade on Monday. Somebody had asked if we could review that, and I'm sorry, we got to 4 out of our 5, but that one we missed. Okay, so I hope you have a really great weekend. I hope if you're watching the Olympics that your teams do well. Get out there and hug someone you love. Guys, don't forget, hit the like button. It moves things up in the algorithm so more people can find the content. Subscribe to the channel. Follow Brent and I in the land of X. Brent Moore, CS, Barbara Armstrong, CS. And have a great day. Bye for now.